abroad will soon have to pay tax to the South African Revenue Service. Residents employed for more than 183 days outside the country will be subject to the so-called Expat Tax on any foreign employment income that exceeds 1 million rand. Amendments to the Income Tax Act were announced last year and will come into effect at the beginning of March. So to discuss this further, we are joined from our Seapoint studios in Cape Town by Coreen van der Merwe, who's the Director of Sovereign Trust South Africa. Coreen, good morning.
Good morning, viewers.
Well, so great to hear you for once. So, Coreen, let's just get straight into this. Now, the announcement obviously was made last year and the day of commencement is fast approaching. But what is the general feeling or, the reception been on the ground to this amendment?
I think it was actually made, the announcement was made already in March 2017 by the then Finance Minister, Private Gordon. And then for a couple of months, it was actually quite quiet, but slowly but surely, the reaction became slightly more aggressive, if I could call it like that. Obviously, there's a lot of negative emotions around that. I think as soon as any changes in legislation affects someone's finances, there is going to be some reaction to it, which will probably and obviously not be positive. I think there is a lot of confusion around how the exact changes are going to impact South Africans working abroad. And perhaps we can talk about that if there's time, to just explain exactly what is changing so that South Africans can understand whether they are actually affected by this change or not.
We, I think, need to go into that to try and explain and also how exactly this will work.
Yeah, so, the current rule is that if you work outside of South Africa for 183 days, of which 60 days are consecutive, and it has to be working outside of South Africa in terms of an employee-employer relationship, then your income, your salary was tax exempt. From the 1st of March, as you've mentioned, it's only the first million that will be exempt. Now, you need to be a South African tax resident to be affected by this. And there are two tests in South Africa that you need to check to see if this actually applies to you. One is the physical residency test, and that's where you count the number of days. And then the other one is the ordinary residency test. And that's usually applicable to people that's been born in South Africa and that now works outside of South Africa. If you work in a country that doesn't have a double taxation agreement with South Africa, I think that's the first thing to consider. Do you work in a country with or without a double taxation agreement with South Africa? If you're in a country that doesn't have a double taxation agreement and you actually pay tax already in that country, from a South African perspective, you will only be expected to pay the difference. Obviously, you will have to prove that you've paid tax in that country, but then you can apply a tax credit in terms of Section 6 quad here in South Africa. I think that has not been made very clear to the South Africans working abroad. If the next step is, let's say you work in a country where there is a double taxation agreement with South Africa, then it's all about where is your permanent home. The double taxation agreements all work very similar. And the key test is, do you have a permanent home in South Africa? If you do, then the expat tax will apply to you. If you don't, if your permanent home is in the other country, then that country has got the taxing rights to your income. Doesn't mean that you're not going to be liable for any other tax in South Africa. If you, for example, have a property which you rent out, you still pay source-based tax here. But on your income, in terms of your employer-employee relationship, you will be liable for tax in that particular country. So I hope that is clear. We see a lot of people phoning us at Sovereign Trust, and they actually don't understand the difference between relying on the double taxation agreements or the 6 quad exemption or credit that you can claim from a South African perspective.
So, Coreen, just to perhaps make it easier, how will the new regime actually differ from what is currently in place?
All right, so I think first of all, with common reporting standards, there's a couple of factors that we need to take into account. I think South Africans took the approach or a lot of South Africans took the approach that when they're outside of South Africa, they don't actually have any filing obligations here anymore. They are done with the South African tax man. A couple of months ago, common reporting standards kicked in and it's really working. financial institutions, banks are all sharing information with their tax authorities, which is being shared with tax authorities all around the world. So which means for South Africans, they have to actually come clear and make sure that their tax filings are 100% up to date here in South Africa. Because if they don't, SARS is going to come knock on their door and say, well, we want to see where do you pay tax, how much actually do you earn, and you're going to have to clear up your affairs here in South Africa and start to pay tax in South Africa if you are actually being affected by the expat tax. So there is a definite change, I think, with regards to when it comes to transparency. And South Africans have to make sure that they speak to South African tax advisors, tax experts, as to how their filings work and whether they are South African tax resident or not. It might be that they actually tax migrated already, but they have to speak to a tax advisor on the ground here in South Africa that understands how expat tax works.
Now, speaking to that specific point, the general understanding, at least anecdotally, that most people seem to have is that tax is collected to pay for roads, schools, hospitals, other government services. And if you're not in the country trying to build a better life for yourself and family, why should you pay? At least this seems to be a question that's coming up quite often. So how would you explain that to those people struggling with that question?
Yes, I think we're talking about maybe two different classes of South Africans. You still have the South Africans that keep on coming back to South Africa, where South Africa is really their home, and they just work outside of the country. And then you also have the South Africans who have moved their families, that has actually established a permanent residency base outside of South Africa. And those people are not going to be affected by the expat tax. I think it's unfair for South Africans who keep on coming back to South Africa to not want to pay tax in South Africa. What the South African taxman has done is just to bring the South African laws in line with what is already happening in a lot of other onshore countries. So this is not something unique to South Africa that they have introduced. So I think it's only fair if South Africa is still your home country and you keep on coming back to South Africa, that you also contribute to the tax that's being collected here in South Africa.
Well, interesting one, and no doubt we will be hearing more. We will be talking more about that. We'll listen to Minister Tito Mbowene's budget speech as well. But thanks so much for giving us some clarity there, Coreen van der Merwe, Director at Sovereign Trust South Africa, talking to us about the amendments to the Income Tax Act that will come into effect on the 1st of March this year, compelling South Africans living and working abroad to pay the South African Revenue Service. Let's take a break.